Are you sitting on a bunch of equity? Many homeowners in the Bay Area are finding they've grown a lot of equity and they're sitting on it. They're not the only ones. As of 2021, there is $10 trillion, a record high in home equity held across the United States. While knowing you have the equity is fantastic, it doesn't do any good unless you sell the property. But what if I told you you can put your equity to work without selling your property? Put your investment appreciation to work to make more money on your money. Sounds good, right? Are you ready to hear how you can do this? First, let me start off by saying if you tap into the equity into your home, it should never be for shopping purposes, never. Everything I'm talking about is for the sole purpose of investing to create income streams and build wealth, okay? Now, in stocks, if you sell when the market's high, you've made your profit. However, with properties, since most of you are living in them, you can't or don't want to sell when the market is high. So what are your options to tap into your profit if you don't want to sell your home? Well, remember, the best thing about real estate is the ability to leverage. That means you're looking into financial products that can unlock the equity, such as cash out refinancing or HELOC, known as home equity lines of credit. Let me be clear, I don't sell loans, but I understand how to use them as a tool to accomplish real estate and build wealth. Because your loan to value has decreased due to the increased appreciation, you have the ability to pull more money out, so you can invest it into other investments at a rate higher than the cost of borrowing the money. For example, my client bought a property 4 years ago with $1 million down payment for $3.5 million that today is worth at least $5 million. That means at the time they bought it, their loan to value was approximately 30%. Now that their home is worth $5 million, their loan to value is only 20%. They now have, instead of $2.5 million in equity, they have $4 million in equity. Leveraging money for some means investing into more real estate, and for others, it could be investing into other businesses. Whatever the case, not touching your equity when it's at its peak means your access later may be diminished or depleted, and the opportunity to invest the money to generate more money elsewhere is lost. So now more than ever, it's your time to build wealth. Think about it. Interest rates are on the rise, though inventory remains low. Markets are still peaking and values are holding strong, but inflation is kicking in hard. Recessionary signs are showing themselves, which means at some point in the near future, the market will turn for a bit. Now imagine you borrow money today at a lower cost than tomorrow and buy an investment property at a lower price tomorrow than today. That's a smart investor. Building wealth and reviewing individual property portfolios to strategize the next year is something I do for all my clients. Contact me for an individualized strategy consultation so you can take advantage of all your equity and coming opportunities. Hope this was helpful. Please like, save, follow, share with anyone that you think should see this, and I'll see you next week.